Today is Tuesday, May 21. It's 8:20 a.m. Eastern. So here are the daily levels that we can use to trade against in the E-mini futures. You'll notice we still have this zone up here, pretty important. But we'll come back to this chart after the market closes to take a look at the trades taken in the E-minis based off the levels here in the spiders. See you then. It is now after 8:30 p.m. and what we're looking at is the spiders and how they reacted off of our levels from this morning. And you might remember I mentioned that there was some indications that there could be a push higher today. And that's what happened. I wanted to be on the long side today, although took trades on the long side here and on the short side here, and did not take this because it was after 3:30. Hit it to the button, 531.52. Pretty precise on that level. So let's jump into the live recording of these trades and we'll talk through these in more detail. You might remember from yesterday where I did not record the entire day. I recorded it, but it didn't pick up the right monitor, the right screen, so nothing but a black screen. So today I made sure. Now I was in the trade already. Notice the time is 5:53 in the morning. I was already in this trade. I bought at the market, did not adjust this level at 529.55 because it was right after 9:45 or so, a few minutes later. But like I said, I was willing to be on the long side. In fact, if I remember, or if I have time, well, I should say if I have time, this could be as long as I want, I guess. But I will show you why I anticipated today to be a little bit of a move up based on how the hourly close yesterday turned out. But anyway, so I'll start playing this, but I'm on the long side here with two contracts. So let's just play this. And so looking initially for my 4 points, that's 4 points in the minis, but the fumble threshold down here and the profit target doesn't really line up with the 4 points in the yes because my entry point was above this level. I went long. I guess I should have pointed this out, but this tiny little candle looks like a cross, this little tiny doji candle here, that was a 9:45 a.m. candle. So they closed above it. So coming down in here, the plan would be to go long at or around that level, slightly above it, really. If you apply the 5-cent buffer, like I usually do. So when they came up into 529.95, spiked through it, that gave the base hit and pulled away. And of course, I'm checking this, comparing it against other charts, other time frames. So there we go. So that was the base hit. Of course, I'm higher because I'm looking for 4 points from my entry point, which was not at the precise level. Just bought here by clicking buy at the market on the chart here, not keying in the order this morning because I was a little bit late. Just wanted to get into this trade because I knew going long would be smart initially. But the point is, looking at this and realizing based on some other indications that when they go, they're going to probably go higher. So I end up moving. There we go, right there. Time is pretty good. Up 6 points or so, 6.25 points. Because here's a thought. Like, a lot of times, or not a lot, sometimes I think maybe it's good just to take a trailer off, like half the position off. So if I took one of the contracts off and then trail the other, well, I'd almost be up here at 530.50 and I'd want to go short there because I trust these levels. So why would I do that when I can just go ahead and take the entire thing off? So taking it off somewhere in the middle here makes more sense because I thought that could be a little bit of resistance. So I'll just take 6 points instead of 4 points, and I got it. So I'll just scrub ahead here. Well, let me back up because that happened pretty fast. So there we go. Went through that, and then now I've got an order key to the system. You saw that possibly, if you paid attention, get keyed into the system to go short here at 530.50. So looking again for 4 points right here in the E-minis. This level is pretty important. Now, at some point here, so I got more than 4 points on the first trade, and at some point here, I just kind of bailed out. They came down really close. Here's what happens. They came down, I'll scrub ahead, really close to filling me, and I just bailed out halfway up here. Now, it ended up working, but I had a couple things going on. I didn't want to babysit this trade because I had a feeling the way they were behaving, they're going to go higher. And they did go higher. I'll just show you. Let's scrub ahead here. So they went up past the point, but ultimately they came down somewhere about here. So that would have definitely satisfied the base hit if I'd stayed the trade. There's no reason not to stay in this trade. It never even hardly ever got above the entry point, much less above the fumble threshold. So anyway, those are really the two official levels because when they got to the end, I'll just scrub ahead here. Many hours passed before they got out of this little range here, and it was Pay attention to the clock in the lower right-hand corner. It was approaching 3:30. So here we go, 3:15 or so, quarter after. And at this point, I had an order to go short a couple contracts here if they got there fast. 531.52 is the level out of the calculator, the formula-derived level. You could apply a 5-cent buffer just to make sure you grab the trade if they get up close to it. But look what happened. It was right after 3:30. Move ahead here just a little bit. They shot up. So right before 3:30, I canceled the order. So I'm not in the trade, or I don't have a pending order at this point because I don't really want to be in a trade after 3:30. Just a rule of mine. Today, this would have worked very well. A very precise trade because they went up and hit 531.52 on the penny. That was it right there, 531.52. So that or a 5-cent buffer, either way, you would have got into this trade and pulled down, I don't know, 10, 12 points or more, quite a bit in a short amount of time. But I'm not counting that because that's not according to the rules. I got 2 trades today, basically 2 base hits. And this was not a trade because of my personal rule of not entering trades after 3:30. Now, anyone who had this level, would have been welcome to take this trade if they're willing and able to do that. But anyway, that's it. I'll go ahead and pause this, or stop that recording because there's nothing else to see. We'll jump back to the full day. So I want to mention something. There was a comment on the video from yesterday, and Stephen, I hope you don't mind me calling you out. I assume that's your name, Stephen CQ. Just had a very simple question. He asked, just support and resistance? Amazing. And that's his words. So I thought maybe I would just sort of expand on this a little bit because, yes, that's pretty much it. Here's the way I like to look at the market. For one thing, these levels are formula derived. And there's a lot of reasons that I believe that these levels are looked at by professionals. They're probably trading these same exact levels because they probably use very similar math to get to the levels. However, I validate and possibly invalidate these levels using a lot of other tools. So it's not like I'm going to blindly trade the levels, although on the tracking log, every level that comes out of the calculator, I treat as if you're playing by the rules. And then I kind of compare that to what I actually do. Sometimes I take a few liberties based on what I'm seeing on other charts. Like, for example, there was a reason that I had a pretty good feeling that today was going to be kind of an up day, kind of a small or slight up day. It wasn't a ton, but they moved up, actually hit an all-time high again. And while I'm at it, let's just talk about this zone up here. Because of what's happening on the larger time frames, this is pretty much a consolidation under this whole zone. So it doesn't, it's important, but, and I said earlier on, I think it was last week when the first time I talked about this area up here, that it was based on longer term data, and it could take a while for a rollover to happen if they were come up into the zone and roll over. It's not really as important. I'm going to keep it up here, but I'm not probably going to trade. Well, it depends. There's probably going to be other levels. There will be other levels based on the math going forward, and we'll see what happens. But anyway, back to what I was saying. Yes, I like to look at things as areas of support and resistance, simply like there's destination. So what's the likely next area that the market's going to get to on the upside or the downside? And the more they hit a level, the more likely they're going to break through and go higher. And what's the next destination? And so that's what I'm looking for. And there's a lot of tools on how to identify these areas. And based on these little small scalp trades of 4 points, that's a pretty typical reaction. You obviously can get more. Let's just go ahead and figure this out. 531.52, and it came down to 530.80 something, 83, 80.45, something like that. So, a pretty healthy move based on a level here. Every level, they're all important. And if they don't react appropriately, they almost always work on a reaction on the opposite side for a recycle. Not an example today to talk about, but there will be plenty more of those in the future. And there's been some in the past that we've talked about already. So anyway, 2 good official trades today. We'll jump to the tracking log now. Really not a whole lot of difference between the playing by the rules log, 2 base hits, 8 points. What I did, I just got a little bit more than 4 points on the first trade, but I jumped out a little sooner than usual on the second, but it equaled 8 points. I still got my 8 points on 2 contracts at each level. So 2 trades, not a bad way to start. Well, Monday was an even better day, but this week looks pretty good so far. And tomorrow we'll do this again. I'm not sure exactly at this point if that FOMC meeting minutes release, that data release is what it's going to do to the market, but I'm pretty sure there are people waiting on that, and it's going to make some difference. But don't want to make predictions of that. I'm just looking at the levels and analyzing things in real time to determine whether it's viable to enter a trade at the levels that have been calculated for the morning. And most of the time they are. I just remembered I was going to show you why I thought the spiders would go up today. So here's a 60-minute chart. This is yesterday, 5/20, May 20. And so I'm just going to scrub ahead here. So here's the last hour, 30 minutes or so of the day. And the bottom of this big breakup candle here was roughly in this area here, 5/29/30, something like that. Let's just find exactly what it is. The low is 5/29/47. So I put a red line here. This, if they were to close hourly below this candle, then a kind of a bullish move out of the bottom of the consolidation of this kind of, the timing's right. Everything, this is pretty classic actually. You don't see this happen all that often. But when it does, you have this big breakup candle, stair stepping down toward the bottom. When it gets to the bottom, this is a place to buy, because if they, you're expecting them to go higher for the next several hours, because this is based on an hourly chart. Now there's other factors that go into this. Now, if they were to start closing hourly candles below the low of this, and a pretty healthy low of this is below 5/29/20, then this whole bullish, did I say bearish earlier? I meant bullish consolidation would be off the table. So anyway, so this morning, they were way down here. Or let's see, they opened, this is the first candle of the day. So they opened down here below the bottom of this, but they never closed anything. They continued up higher all day long. Anyway, that's the answer to the question of why did I think they were going to make a push higher today? There you go. So tomorrow we'll do this again. I'll put out the levels in the morning. You're willing to try them and you trade them if you like, and we'll analyze all the trades after the market closes and see what happened. Thanks for watching. Consider subscribing if you haven't already. Have a great day.